You've got the Bank of England as well coming out today. They're expected to add to the stimulus with 25, possibly 50 billion of quantitative easing. And of course, it comes on the back of the Fed comments last night. Joining us for more, Marc-Ali Ben Abdallah, strategist at Credit Agricole, and Wong, general manager at fundsupermarket.com. Gentlemen, good to see you. Marc-Ali, the message from Western central bankers is very much one of, look, we're going to keep the stimulus in place here. We're going to, expansionary monetary policy in place. Is that still then a green light for investors to buy assets?
Yeah, absolutely. I think that in the current situation, to some extent, what is very good is the policy mix. The fact that we know that public support will be here and that the monetary bias will remain accommodative, because we know that we have clearly a good signs of the recovery. One of the biggest piece of news that we had is the strength of the recovery, I would say the rebound, economic rebound in the US in the third quarter. We know that in these figures, plus 3.5% of growth. We know that 1.5% come from public support, but it remains, a large part from organic growth. We have seen in that figures, for instance, that the investment in equipment and software was resuming. That's a good piece of news. So generally speaking, we still need, and we have seen that the investors were very, carefully scrutinizing what the central bankers were saying on their bias. So we know that the Fed has communicated on a gradual disengagement, first of all on liquidity programs, and we think that there will have no move on interest rates in 2010. We are just expecting a very gradual disengagement, through the ending of some liquidity programs.
This very loose monetary stimulus from the West is, there's a fear it's creating asset bubbles, of course, in your part of the world. Are governments going to react to the asset bubbles, or is it going to keep running?
Yes, actually, I think that governments here are concerned about asset bubbles developing. To a certain extent, they are still focused on the economy. They think that the economic recovery is a fragile one, and they also want to keep their exports competitive. But at the same time, the flood of money by the stimulus packages have actually caused certain assets here to move up very strongly. Property prices, gold, things like that, oil as well has also started to move up. So I think they are paying a lot of attention to the possibility of asset bubbles developing.
Sui Zhao, it's Brian Shackman here in the States. When would you like to see the West, whether it's the ECB, the BOE, or the Fed, to start moving toward a more of a tightening stance then?
I think we're probably not there yet. Probably sometime next year, perhaps third or fourth quarter of next year. Then I think we'll actually see them start to move rates upwards.
Mark, hi, it's Lisa over in Singapore. So Sui Zhao says he is seeing asset bubbles in Singapore. We've got the World Bank saying that most of the money flowing into Asia is divorced from the fundamental forces of supply and demand. Are you concerned that we've got a problem developing over here?
Yeah, we pretty much agree with this idea. That is to say that, the liquidity flowing into Asian countries, especially emerging countries, resulting from their growth in exportations and so on, and the growth in the economies, is now threatening to some extent, I would say the domestic situation, because for sure the question would be about tightening monetary conditions just to cool down the situations in on some assets, especially the real estate. But we think that we have not to put too much emphasis on this, because the very story now on the global side is less about this domestic risk of bubbles rather than global imbalances and the rebalances needed. And the big question now is to know to what extent these economies are going to make their peg to the dollar less flexible, right. A bit more flexible. That's the big issue, more than this, the development of these bubbles, because we know that at some point in time they will tighten their monetary stance.
Sui Zhao, how big of a problem is this going to be if we get a bubble bursting in China? Do you think there are bubbles in China, first of all? And is it a problem? I mean, when you look at growth in Asia, East Asia in particular, yeah, it looks okay. But if you remove China from the equation, they're not doing that well. So if China has a hiccup, this could this potentially be a problem for the entire area?
Right now, generally for Asia, it's expected that, yes, economic growth will be faster. And when you have that happening, inflation tends to be high also. A certain amount of inflation is all right. It's just that we're talking about asset bubbles just now. There is a possibility that if it's allowed to go unchecked, government does absolutely nothing to rein back all of this money flowing into selected asset classes, then we will eventually have such an asset bubble developing, whether or not the fundamentals are good, whether or not economic growth continues, simply because the money has pushed the valuations of these asset classes beyond what they should reasonably be. Now, we might not exactly be there yet, but it's also about what are the actions that might be taken before we're there, because you don't want to be in a situation where we are finally in an asset bubble, because by then it'll be too late. Because usually when asset bubbles pop, then actually they can come down very, very drastically.
What are Asian central banks going to do with all of the money that they're pulling in?
Well, they can take steps to make sure that there's no over-speculation, whether they can tighten up certain regulations, demand that there's not too much lending, too much leverage used in moving into these type of property, like say property or asset type of bubbles. What they can do is just to ensure that there's not too much speculation in these type of asset classes, like for example property.
Well, thanks for that, Wong from fundsupermarket.com, and Marc-Ali Ben Abdallah from Agricole. Thank you both.